You know that feeling when you're juggling a dozen different financial balls at once? I mean, you're trying to save, you're trying to invest, pay down debt, make sure you've got the right insurance. It can get, well, pretty overwhelming. And it often feels like all these pieces of your financial life are just scattered all over the place. So let me ask you this. When you think about your savings, your retirement account, your insurance, are they all working together as part of one big strategy? Or if you're being honest, does it feel a little more like you're just collecting random puzzle pieces, kind of hoping they'll all magically fit together one day to create a clear picture? Well, for a lot of us, the approach looks like what's on the left here, just a series of isolated decisions. Today, we focus on saving some money. Tomorrow, we pick an investment. We're not really thinking about how it all connects. But the goal, where we want to be, is over on the right, an integrated system where every single piece is working in harmony for one single purpose. So, how do we get from that scattered pile of puzzle pieces to a powerful, coordinated strategy? Well, it all starts with a huge shift in perspective. It's about learning to see the whole picture. This means we've got to zoom out. It's not about micromanaging one specific account or one investment anymore. It's about really understanding that every single financial decision you make creates these little ripples across your entire financial life. And this brings us to the big idea for today's explainer, holistic financial planning. At its core, it's an approach that looks at every single aspect of your financial life, not as separate items, but as one big interconnected system. And that's the key phrase right there, an interconnected system. And listen, when we say the whole picture, we really mean it. A holistic approach covers everything, from your day-to-day income and your budget, all the way to long-term stuff like your retirement and even your estate plans. The magic is that each one of these is planned with all the others in mind. Okay, so that's the what, that's the theory, but how does this actually work in the real world? Let's take a look at how these pieces really start to connect. One of the most powerful things about a holistic plan is how it weaves together your goals across different timelines. You've got your short-term needs, right, like building that emergency fund. Then you have medium-term goals, maybe saving for a house. And, of course, the big one, your long-term retirement. A real plan makes sure that taking care of today doesn't end up costing you tomorrow. And it's all about finding that balance. See, this isn't about being some super saver who never has any fun, but it's also not about spending like there's no tomorrow. A good holistic plan is designed to find that perfect sweet spot so you can actually enjoy your life today without guilt while you're also systematically getting ready for the future. Now, let's pop the hood and look at the engine. A really solid financial plan is built on 3 pillars. First up is protection. That's your insurance, your emergency fund. Think of it as a shield for your other assets. Then you've got growth, your investments, which is the engine that's going to fund your big long-term goals. And finally, liquidity, which is your cash flow. This is what lets you handle a surprise emergency without having to panic sell your investments. You see how they all support each other? It creates a really stable structure. You know, life is full of curveballs. That's why a holistic plan is all about being proactive, not reactive. It's about spotting potential risks before they turn into full-blown crises. It's about using tools like insurance and diversification to build these financial shock absorbers right into your strategy. That way, when the unexpected happens, you're ready for it. Your life is not going to stand still, so why should your financial plan? And that brings us to a super important point. Your plan has to adapt to the different stages of your life. A truly holistic plan is a living, breathing thing. It evolves right along with you. So in your early career, the focus is all about aggressive growth, right? Maybe your asset allocation is, say, 80% in equities. But then as you move into mid-career and maybe have a family, that strategy adapts. It has to balance that growth with more protection. And then, as you get closer to retirement, the focus shifts again, maybe to just 40% in equities, to preserve everything you've worked so hard to build. The plan is dynamic. It's not static. So, we've talked about the mechanics, we've talked about the strategy, but what is all this really for? The true goal here goes way beyond the numbers on a spreadsheet. It's about getting something way more valuable: peace of mind. Luck. Is maximizing your investment returns important? Yeah, of course it is. But it's not the ultimate goal. The real prize, the whole point of a holistic plan, is optimizing all of your resources to achieve overall financial well-being. That's the whole shebang. And let me tell you, achieving that state of well-being, the payoff is massive. It means less financial stress in your day-to-day life. It gives you real confidence in the decisions you're making. And maybe most importantly, it gives you this incredible clarity, a clear path forward for your future.
The source material for this explainer just frames this so perfectly. It says that financial planning is really about life planning, using money as a tool. That just reframes the whole thing, doesn't it? Money isn't the goal, it's just the tool you get to use to build the life you actually want to live.
And this brings us right back to where we started. Remember that chaotic pile of puzzle pieces? With a holistic approach, you're not just collecting those pieces anymore. You are consciously, purposefully assembling them into your own coherent masterpiece. So, as we wrap this up, I'm going to leave you with a question to chew on. Take a look at your own financial life, all those individual parts. The question isn't just whether they're organized. The real question is, what kind of masterpiece could all your financial pieces create if they were finally, truly working together?